Hello, everyone. This is Craig Brailsford with Red Chip Companies. Thank you for joining today's event with the Global Music Industry ETF, which trades on the New York Stock Exchange American under the ticker MUSQ. With us today, we have David Schulhoff, founder and CEO of the Global Music Industry ETF. We will begin with David's presentation in a moment, and then we will answer your questions. Users may submit a question at any time by using the Q&A tool at the bottom of the Zoom window. Before we begin, please allow me to read the Safe Harbor Statement. This call may contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act of 1995. All statements pertaining to future financial and/or operating results, along with other statements about the future expectations, beliefs, goals, plans, or prospects expressed by management, constitute forward-looking statements. Any statements that are not historical facts should also be considered forward-looking statements. Of course, forward-looking statements involve risks and uncertainties. I now turn this webinar over to David. Please go ahead.
Thank you, Craig. Good afternoon, everyone. My name is David Schulhoff. I'm the founder and CEO of MUSQ. We are the music ETF. We are the first pure-play music exchange-traded fund, giving investors total liquidity and diversification across the entire global music industry, which includes streaming, content, live music events and ticketing, equipment and technology, and satellite and radio. A little bit of background around me. I've been investing in the music industry for over 25 years. I've owned many music publishing companies and record companies. I had a private equity-backed company called Evergreen Copyrights. We owned everything from Bill Monroe to Death Row. Taylor Swift was one of my writers when she was 14 years old. We had Roy Orbison estate. We had Seals and Crofts. We had Death Row Records. We had Snoop, Dre, tons of hip hop. Artists like J.J. Cale. We won the Grammy with Eric Clapton. And I sold the portfolio to KKR. That company today became BMG Rights Management. And I've held various other companies overseeing music from Miramax and Dimension Films, producing all of the soundtracks to over 150 movies. We had 150 Oscar nominations, and I produced and music supervised all these films. So I have a deep background in music and music supervision and music publishing. And about 2 years ago, I was going to launch another music publishing company, and I looked around and I saw all these private equity firms, Blackstone, KKR, Apollo, they were all backing management teams. And I wanted to create something very different, something designed for the retail investor. So I created MUSQ, which provides total exposure to the global music industry. And I'm proud to say that we are now entering our second year. We listed the fund on the New York Stock Exchange in July of last year. And today we are 15 months into MUSQ. The investment case for music is very simple. Music is undervalued today. Music is under-monetized. Music is cheap compared to what you pay for HBO Go, for Hulu, for Disney. You pay double that. Today you pay $12 for Spotify or for Apple Music or YouTube or Amazon, and you get access to 200 million songs. You pay double that for a slice of video on Netflix or Disney. So the investment case is that music is very cheap, and what you're seeing is all the streaming companies are all raising rates. And I'm just looking now at Spotify in the aftermarket up 10% because everyone is so bullish. All the investors are so bullish on streaming. The music industry today is really entering into a golden age. If you read the Goldman Sachs report, there's a well-known report called Music in the Air. This is a little bit outdated. The industry today is really a $100 billion business going to a $171 billion business. And it's growing a CAGR of 10 to 14%. This gives you an example of kind of the growth around recorded music and music publishing and paid streaming. You can see here from 2023 to 2030, the numbers are close to doubling. Global paid streaming subscribers today are around 700 million. They're going to 1.3, 1.4 billion by 2030 in the next 6 years. Spotify, Tencent, Apple, Amazon, Google, those are all the leaders in paid streaming. And these numbers are expected to double over the next 6 years. And all these streaming companies are raising rates So they're generating incremental revenue from their existing subscribers, and they're generating, new revenue, additional revenue from new subscribers. So again, we believe music is very undervalued. We think music is very cheap. Streaming is growing at 10 to 15% in the United States today. It's as high as 25% in the emerging markets. 84% of all music consumption today in the United States is dominated by streaming. And we expect those numbers to grow very aggressively in the emerging markets. Cell phone penetration is really low in the emerging markets. Here you can see how aggressive it is in the United States on this blue line here, but on the emerging markets, it's really at 10 or 11%. So the cost to attach a service to a cell phone carrier is really de minimis today. You think about 25 years ago, you had to open up a retail store in an emerging market to launch a music company or to sell music. Today, you just partner with a cell phone carrier, and you have infinite possibilities for streaming music. So paid streaming subscribers are really expected to grow meaningfully from current levels as streaming penetration grows through cell phone penetration. So the recorded music market today is really growing at around 7 to 10% in the US. It's growing at 20 to 25% in the emerging markets. And if you look at all of the record music companies that have reported in the last week or so, from Tencent to Sony to Universal Music Group, they've all reported revenue growth of 10 to 15%. All these music companies are hitched to all of the streaming companies. So when the streaming companies grow, they pay out 70% of their revenues to all the labels. And so the labels are benefiting from all this streaming growth. And that's why you see all these labels continue to report very positive growth every quarter. Live music is a big component of what we do as well. Obviously, it's hard to ignore the tour, the Eras tour and the Renaissance tour from Taylor Swift and Beyonce. The market for live music is just incredible today. Revenues are up 10 times from COVID. And look at some of these new venues that are being built. Companies, Madison Square Garden has opened up the Sphere in Las Vegas, which has had Dead & Co. and John Mayer, and now they have the Eagles performing there. These are incredible venues with incredible experiences, and we expect live music to continue to grow aggressively. It's been growing 25% every year over the last 7 years since COVID. And we have all these companies in our fund, from Live Nation to CTS Eventum to Vivid Seats to Madison Square Garden to Sphere, and we're capturing all this growth around live music. So our belief is that music is really an indispensable item in life, like food, like water. We believe that this fund is extremely uncorrelated to the rest of the market. Obviously, there's a lot of excitement in the market today. SPYs, Qs are going through the roof, NVIDIA, everyone is, and we've seen huge inflows into these funds just in the last week since the election. But that's going to come to an end at some point, just like we've seen over the last 10 years. We've seen bubbles happen, and we think investors need to be diversified into liquid alternatives. And we think music represents a very compelling liquid alternative. We are advocating some percent of an investor's portfolio in music because it's uncorrelated to the rest of the market. It's a hedge against inflation. It's a very steady asset that's growing. It's indispensable. When you look at tough times like COVID, music subscriptions were actually growing significantly. Households were subscribing to 2, 3, or 4 different services to consume music or content. And there's nothing that can replace the live music experience. So we think music is very uncorrelated. It's a very indispensable item to have in one's portfolio, and we're advocating that as these markets are reaching what I perceive to be very frothy levels. MUSQ is a really convenient way to get exposure to music companies around the world. More than 50% of the holdings in our fund are actually international equities in countries like South Korea, which has a huge K-pop presence, companies in China, in Japan, all across Western Europe, from France to Germany. And these are really exciting companies that are hard to trade. To access a lot of these companies, you'd have to open up local accounts to trade them. There are costs associated with that. And so what we've done with MUSQ is really create just a very convenient, liquid, portable way to invest across the entire music ecosystem. So these are the different buckets, from streaming to content to distribution to live music to ticketing to satellite and to radio. So I want to spend a few minutes talking about the index to explain how we determine the eligibility requirements for all the music companies in this fund. So we scrape the universe for all companies around the world that generate more than 50% of their revenues from music. These could be music royalty trusts, they could be record companies, they could be labels, publishing companies, live music companies. So any company that generates more than 50% of its revenue from music, or they have to be a top 5 player in streaming or content or live music and ticketing. And no company can be smaller than $100 million in market cap and has to have average daily trading liquidity of $500,000 a day. So if you've looked at some of the holdings in our fund, you'll see all the companies, with the exception of 3, generate more, or 3 or 4 generate more than 50% of their revenues from music. The ones that are top 5 players in the streaming market or the content market are Apple, Amazon, and Google, because after Spotify and Tencent, Apple, Amazon, and Google are the 3rd, 4th, and 5th largest streaming companies with paid streaming subscribers in the world. So we have to include them in the fund. And Sony, of course, is the 2nd or 3rd biggest music company in the world after Universal Music Group. So all of these companies are market cap weighted. The big names are capped at 5%. So Apple, Amazon, and Google can never be more than 5%. And again, no company can be smaller than $100 million in market cap. All these companies are market cap weighted, and every quarter the index gets rebalanced, and some of the companies come off to the extent that they fall below the minimum threshold for market cap. And there are new companies that become eligible either through a SPAC or through a merger or reorganization. This is as of August, but this provides a snapshot of all the different categories of music companies that are in the fund currently, the territory that they're in, and some of the names. And of course, if you go to our website at musqetf.com, you can see a current snapshot of the holdings in our fund. Around 31% of the companies today are content companies. So companies like Universal Music Group, Warner Music Group, Sony. Internationally, companies like Hybe in South Korea, which own all the management companies of Ariana Grande and Justin Bieber, companies like Avex in Japan, companies like Believe in France. Those would be the content and distribution companies. Of course, the streaming companies we know, from Spotify to Apple to Amazon to Google to Tencent. We have all the live music and ticketing companies, CTS Eventim, a huge music promoter in Germany, Live Nation, of course, Sphere, Madison Square Garden, Vivid Seats. Then we have all the music technology. So these are companies like Yamaha, Sonos, Roland. These are companies that are providing all the tools that artists are utilizing to create new music. They're providing tools to producers to rip files, to create exciting new music, to use generative AI to create compelling new music. And we have all these companies in our fund. And then we have satellite and broadcasting names, companies like Sirius Radio and Town Square Media. So though that is effectively that's an overview of MUSQ, and happy to open this up to Q&A to answer any questions the audience may have.
Thanks, David. Yes, we are taking your questions. Press the Q&A button and type in your question, participants, And we will be only taking your written questions today. So click that Q&A button. A text box will appear. Type in your question. We will answer it. Thank you, David. Are you buying entire music catalogs, David?
So the fund currently has music royalty trusts and music companies that have music publishing entities in them. The fund is not currently, it's only focused on investing in public equities that invest in music catalogs. Having said that, there are some rules that have been recently passed, which allow ETFs to include up to 15% of privates in the fund. So we are looking at the possibility of exploring private music publishing catalogs that could exist or coexist with all the public equities. But for now, we just have exposure. We're giving investors exposure to all the music companies that have, all the public music companies that have investments in music publishing. Of course, those are all the big names like Universal and Warner and Sony. Hypnosis was also one that was in our fund, but they got taken private by Blackstone. Roundhill Music was another one that was a royalty trust that also got taken private. But a lot of these K-pop companies, they own a lot of music publishing. Companies like Avex in Japan does, Tencent Music does. So we're giving investors exposure, again, to public equities that have investments in music publishing companies.
How many dollars are under management now in the ETF, David? How are you able to operate at this level? What are your next targets? And what would you be able to do once you reach those targets?
So the fund is really just a little over a year old, and we're very proud to say we have close to $23 million in the fund, 23 million of assets under management. We have 930,000 units outstanding and trading close to $24. And look, our goal is to probably get to somewhere close to 100 million of AUM in the next several months. And we expect to continue to grow. We're excited about the future of music. We're excited about a lot of new companies that we're aware of that are coming to market that we'll be including in the fund. And again, we're very bullish on the growth of music around streaming and content and live music. And we think that music's undervalued, and we think that these companies will continue to grow and perform very well. And we think this is a great long-term investment for investors.
Okay, just to repeat, you're hoping to quadruple the amount of dollars under management in the next, how many months was that?
Well, so we're not making any promissory statements around what we think the assets under management should be. We're in the process of onboarding several wirehouses and broker dealers, and which would give us access to, several 100,000 financial advisors that would be recommending MUSQ to investors. And we expect, once we've onboarded these platforms, we expect the AUM to quadruple, and we expect that to happen in the near future.
If the dollar gets stronger, does this work against the growth of the ETF?
So 60% of these equities are being traded in local currency, and we're buying them in territories like South Korea and China and Japan. And about 40 to 45% of the equities which are in the US are traded in dollar. And so, again, we think we have very good diversification in the catalog. So we don't really view FX risk or currency exchange risk as an issue with this fund.
Great presentation. Do you use leverage?
The fund does not use any leverage. On
the live music streaming, are you doing AR subscriptions?
On the live music streaming, so I'd like to understand what that means. We have companies in the fund that sell tickets like Live Nation, and some of the companies may be also streaming live music, but I don't really understand the question on that.
To the person who wrote in, if you could just reopen a question and type in with more details on what you're trying to find out, please. Thank you. We'll give him a minute to write.
Is there another question, Craig?
Yes. The
Why don't
fund
you-
has, of course, the fund, as you have said, David, has significant geographical diversity with particularly high exposure to South Korea, I think maybe about 22%, and of course the United States at just over 50%. What drives that allocation strategy, and how do you see these weightings evolving?
So South Korea is a very important part of the global music market. Companies like Hybe, JYP, SM Entertainment, they have a very large part of the global music revenue, and so that's why the percentages are like that. Many of these companies have entered into long-term distribution deals with companies like Universal and Warner Music Group. We expect K-pop to continue to grow. These companies have actually performed extremely well in the last couple of weeks. Some of it can be cyclical. So some tours, whether it's Monster X or Blackpink, may be coming out 1 or 2 quarters and may not come out another quarter, but they're still very, very big businesses. And so after the US market, they are the second biggest market. And so when we created the index, we looked carefully at all the markets that were contributing to music, and we created what we thought was a very good diversified portfolio of companies, giving the right level of international and geographical exposure to investors.
With your relatively concentrated top 10 that includes tech giants such as Apple, Amazon, how do you balance pure play music industry exposure with these diversified companies?
So if you look at the top 10 holdings, it's Apple, Amazon, Google, Sony. Those are the 4 companies that are diversified. And then the ones that are more core are obviously Live Nation, Spotify, Tencent Music. So again, the big names are there because they are big contributors to the first or second largest segment of the fund, which is streaming. And so and between those companies, right, Apple, Amazon, and Google, they each have, there's a roughly 700 million paid streaming subscribers. They're roughly half that. So we had to include that in the fund. But again, their weights are capped at 5%, and we expect them to continue to deliver a lot of growth to music. And so Sony, of course, is one of the companies that is the second or third largest content owner after Universal Music Group. And so that's why it's also a top holding. But we think these companies are important. We think that they are part of the music industry. It's hard to have them. It's hard to identify the music industry and not include these names. And we think we've done a very good job at diversifying all the holdings and giving them the right weights.
What is your exposure to South Asian music companies?
So we have companies, right now we have companies in Taiwan. In fact, one of our big holdings is a company called HIM, which is an incredible company. Of course, we have Cloud Music, we have Tencent Music. So we are continuing to look at other markets in Asia, but right now it's really focused on Taiwan, on Japan, on China, and South Korea.
The fund has a gross expense ratio of 0.9% with a contractual waiver to 0.77% through August 2025. What factors might influence the expense ratio after the waiver period?
So in our prospectus, it's 89 bips is the gross expense ratio. We've actually waived 14 points of that, and so it's really closer to 75 bips is really closer to the net expense ratio that you're paying. And we think that again, we're purchasing equities in a lot of foreign markets. There are costs associated with that, and that's why we're passing them on to the investor. But for the investor to go and access a lot of these international companies and acquire them in local currencies, the cost would actually be greater than that. So we think we've provided something cost efficient and convenient for investors to get exposure to those companies.
All right. You have the criterion of a company in your portfolio must derive at least 50% of its revenues or $1 billion in annual sales from the music industry. Obviously, there are many companies that would fit that bill. How do you select? How do you evaluate and select?
So all the companies have to generate more than 50% of their revenues from music, or they have to be a top 5 player. So it's in excess of $1 billion, but they have to be a top 5 player in either streaming or content or live music or equipment and tech or satellite and radio. So again, the only names that really fall outside of the 50% revenue test are Apple, Amazon, Google, and Sony. All the other companies in the fund generate more than 50% of their revenues from music.
You mentioned some East Asian countries, obviously. What about India? Are you looking at India?
We have looked at India. So currently there are no companies in India that are public that satisfy the criteria for eligibility in this fund.
Thank you very much. The prospectus mentions AI as a transformative force in the music industry. How is the fund positioning itself to capitalize on AI-driven opportunities?
So we think AI represents a massive, transformative, and highly disruptive opportunity for the music industry. There are obviously risks associated with it, including market saturation and piracy, but the ability for artists to create new music, songwriters to create new songs, they're using all these tools it's creating an enormous surplus of music. And then with regard to piracy, there are several bills before Congress right now that we expect the president to shortly sign into law, like the No Fakes Act, which will make it a crime to actually lift someone's voice and utilize it without their permission. And the states have actually already started passing laws like the Elvis Act in Tennessee that makes it a crime to lift someone's voice. So AI is really an incredible opportunity for artists to create new music. When you think about what it can do for users, Alexa to me is sort of like the next iTunes player or the next Walkman. It's really an incredible device that's only limited by one's imagination. So we think AI is a great opportunity for consumers of music and also for musicians and songwriters and for artists.
What key metrics, besides the ones you have already discussed, and industry developments should investors monitor to gauge the health and growth potential of the global music industry?
So again, I encourage viewers today to read the Goldman Sachs report, Music in the Air. It comes out semi-annually, sometimes quarterly. Lisa Yang is the top analyst, and I cited some really key revenue drivers. I think it's important to look at streaming growth rates, record company growth rates, music publishing growth rates, live music growth rates. I addressed them today, and that's important. You should. I encourage folks to also read the Luminate report, which just talks about streaming, to see the growth of streaming. And then there's the RIAA report, the Recorded Industry Association of America, and there's the IFPI report, the International Phonograph report, and all of that gives very robust summaries on the growth of streaming, the growth of live music, the growth of record companies, and all of that points to just a very healthy environment for music. Right now, we're really entering, it's really about the digitization of music. We talked about AI. There's also blockchain that's having an enormous impact on the music industry today. Artists historically and writers had to affiliate with performing rights organizations like ASCAP, BMI, and CSEC, and their money was tied up for 9 months. Now they have an opportunity to collect royalties on a blockchain, so royalties can be paid in real time. everything is becoming transparent, and it's becoming digitized, and that's what's exciting about the music industry today.
Given that quarterly rebalancing schedule, David, could you explain your process for evaluating and potentially adding those new companies to the index as the music industry evolves?
Right. So every quarter, again, we scrape the universe for companies. We look at IPOs. We look at, funny, we get approached all the time from companies that are too small, but we keep an eye on them. There are some companies that are focused on vinyl or streaming. And to the extent that they cross the $100 million mark, and they have enough liquidity where we can trade them, because this fund has capacity to take on any amount of capital, and we want to make sure that we can effectively buy any position. So if it has that liquidity, it becomes eligible into the fund. And again, some of these companies may drop off. Their revenues may have fallen. Their market cap valuations may have dropped. But for existing constituents, we may not want to get rid of them completely, in which case we give them a half weight. So for that quarter at the rebalance, they may receive a half weight if they fall below 100 million, but they're above 80 million. Once they've fallen below 80 million, they also become ineligible. We've also have a negative momentum score for certain companies that perform extremely poorly, that are dragging down the fund. They also at the rebalance, we look and we determine if they no longer become eligible for the fund. And so we look at this every quarter. A few companies come off and a few companies go on. For the most part, a lot of these companies stay on. The only thing that changes are their weights in the fund.
You mentioned live events. Live events companies like Live Nation and CTS Eventim are in your portfolio. And how do you view the recovery and growth potential of that live music segment?
Well, the recovery from COVID has been nothing short of exceptional. These companies are up 10 times, and they continue to deliver great results. Again, folks want to go out and see live music. They're willing to pay $1,300 for a Taylor Swift ticket. You have venues like Sphere that are being built for $2.5 billion. That's the first one in Las Vegas. They've announced that they're opening up a second one in Abu Dhabi. And so we think live music is really going to continue to grow explosively. And it's the way that artists make money today. They make money touring. They are in touch with their fans, with their super fans. And so all these companies that participate in that, we've included in the fund, and we have very bullish expectations for all of these live music companies.
Would things like VR and AR and blockchain affect your investment thesis and portfolio composition? Other emerging technologies, perhaps?
I suppose if there was a company that generated its revenue from the music industry and they were a VR or an AR company, if there was a company, if Oculus, for instance, was just focused on music, we would look at that. That would actually be an exciting company that would fall under technology. And so, but again, Apple's in the fund, and Amazon's in the fund, and to the extent that they're, employing uses of VR and AR, we're giving investors exposure to that. I mean, Craig, I see some other questions. I can just jump in.
Yes, sorry, I had myself on mute. I apologize. I had already chosen one here. This person writes, over the past 5 years, MUSQ has traded in a narrow range from $22 to $26. What main action are you taking to break out?
So if you were a shareholder in this fund, you would have received notice recently that we're providing a special rebalance to this fund at the end of this month. And the special rebalance will be providing more weight to content, streaming, and live music. And we'll be providing less weight to companies that are being disrupted, like broadcasting and radio, and to some extent technology. So we think the rebalance will actually provide some very positive benefits for investors. We want to start overweighting companies like Spotify, companies like Live Nation, some of the content companies. And we think this fund is positioned for some very explosive growth in 2025. Look, this is a very uncorrelated fund. It's not supposed to have a hockey stick effect. It's not a meme stock, even though it's music. This is not providing meme volatility like AMC or GameStop. We believe this is a very steady long-term growth opportunity for investors, and we encourage investors to look at music seriously and to allocate this to their portfolio. These are real companies in the trillions of dollars, and the industry has some very positive data behind it to support its very aggressive growth in the near future. And so we think this fund captures all that growth and innovation. And again, at the end of this month, investors will see the new weights, and we think this fund is positioned for a lot of growth beyond breaking out beyond 26.
Thank you very much, David. We are coming up to the top of the hour. If you would like to add any final words, such as the value proposition. Yes, David, would you like to sign off with any final words to our
Sorry, I thought
today?
that was a question. Yeah, no, thanks everyone for joining. Again, we think music's extremely undervalued, extremely undermonetized. This is an uncorrelated fund. This is a hedge against inflation. These are great companies to own that are capturing, all the innovation around the music industry. It's very diversified. And for the first time, we're giving investors total liquid exposure to the music industry. They never had that before. And now you can invest in your favorite artist. You can invest, if you like Taylor Swift, well, she signed to Republic. They're owned by Universal. We have Universal in the fund. We have her promoter, Live Nation, in the fund. You're getting exposure to every aspect of the industry for any artist. And as the investors know, this ETF trades like a stock. We encourage investors to be investors and to hold on to it. But if to the extent that you want to invest and trade, we're giving you liquidity to the music industry. If you think that Q4 is a really popular time to own music because we're coming up around Christmas, then that's a great time to invest in the music industry. Right now, we're in the middle of music earnings, and we encourage, I think the results have been, I'm looking at Spotify right now, and the results are very promising. And we have all these companies in our fund. So, this is just a great way to get exposure to the music industry.
Thank you very much, Dave.
Thank you, Craig. Thank you. I'd like to thank everybody for joining today. And feel free to follow up with RedChip if you have any questions. If you have any written questions, feel free to email them as well. I'm happy to provide written answers to your questions.
And I can tell the participants exactly how to do that, David. Thank you. The one way to do it is to write us at musq@redchip.com, musq@redchip.com, or call us at 1-800-RED-CHIP. The global music industry ETF also has a information page created by RedChip. It's musqinfo.com. It's a great page. You can view and download today's investor presentation, for example. You can see and download the fact sheet, and you can sign up for news alerts on the global music industry ETF. And we have webinars coming up here at RedChip. Tomorrow it's ASP Isotopes. On Thursday, it's Alta Global Group, and this coming Monday, we have Phoenix Motor. All webinars start like today's at 4:15 p.m. Register for those events and for all RedChip webinars at redchip.com/events, where you can also view an archived version of today's Global Music Industry ETF webinar. Thanks again to our many participants today, and thank you very much, David.
Thank you, Craig. Thanks, everyone, for joining today.